Hello everyone, George DeSantis here with the Look at the Market. Um, it's Tuesday, December 27th, 2022, and since we didn't have a family meeting or Zoom meeting on the weekend because of the holiday, etc., I thought today, since I have some time on my hands, of course, I would do a YouTube video. And so let's get going with that. Before we start talking about stocks, etc., there's a disclaimer that by law, etc., we should bring up. So let's do that now. And the disclaimer simply instructs you that, risk is always a factor that needs to be considered in investing. And the fact is that I'm not a licensed professional investment advisor. I'm a psychologist, but I've been doing this for myself mostly, and then I share it with whoever wants to look at it um, on a YouTube video or sometimes on a Zoom call. So we'll take a look at the market, the general market. If you need investment advice, you should consult a licensed professional investment advisor. Um, we'll start out by looking at the S&P and perhaps the Nasdaq, and we'll try to see what we can glean from those charts. So let's begin to do that. Let me pause the video here. Okay, so let's begin by looking at a weekly chart of the S&P 500, and I have two charts up here. I'll explain as we go along. I know that this one here, where you see my cursor, is pretty busy, lots of indicators on it, but I'll try to make it as clear as I can for you. Okay, so let's begin to take a look. First of all, I have three moving averages here. Okay, the yellow line is a 4 EMA, exponential moving average. The red line is a 9 EMA, and the green line is a 30 front-weighted moving average. So there are three moving averages. Before we go further, let me tell you what approach I'm going to use. One of my mentors, a guy I respect a lot, and I attended many of his live workshops in the city when we had those technology seminars in the city. um, Larry Williams. So what Larry Williams pointed out in one of his videos some time ago is that he considers about six factors when he's trading. Okay, first of all, he wants to know that we are in a good trend, in an uptrend, if he's going to be buying. Okay, and then he considers momentum, and so he will use whatever momentum indicators are available to him, like MACD or something else. And then he considers the accumulation distribution indicator. He designed one, and so he uses that. And then seasonality. And of course, he is one of the first people to talk about seasonality more than 50 years ago. He uses two others which we won't use for a couple of reasons. He looks for what he calls springboard patterns, chart patterns, but we usually look at those patterns too, like triangles, etc. And then the last one is cycles. Now he has his own approach to designing cycles, and they're not available to me, so I couldn't discuss those. But what I will do is I will look with you at the top three or four: trend, momentum, accumulation, distribution, and seasonality, but especially the top three. Okay, so let's start with trend. Now, insofar as the trend is concerned on the S&P on the weekly chart, you can see if we look at the moving averages, if the shorter term moving average, the 4 is above the 9 and the 9 is above the 30, we can conclude that there is an uptrend. The shorter term moving averages are above each other sequentially. okay? And so we can assume that that's an uptrend. Now, we had a minor uptrend. uh, let's see, we had a big uptrend here because you could see the 4 above the 9, 9 above the 30. And so all the way from about March of 2020, you could see that we had an uptrend, okay? And that trend lasted until December, January of 2021. Um, and since then, we've been in a downtrend with some variations here. We've been in a downtrend. So moving averages would be one thing to look at in so far as determining the trend. Another thing before we leave this part of the chart is you could see that I drew a line, a trend line, okay? Not a moving average, but a trend line, uh, starting at the high in January. And market hit that high, came down here, went up and made a high in March, came down, made a high in August, came down, made a high in December. So what we have is uh, we have a market making lower highs and lower lows. And that's basically one of the descriptions of a downtrend. And some people would say, well, depending on the percentage movement, a bear market. And so if you want to consider this can be considered a bear market. We went down just about 20% or something in its worst. I mean, I think by that time, by this area here, by October, middle of October, we were down about 20%, I believe. So bear market, downtrend on the weekly chart. Let's look at another trend indicator, and that is the ADX, okay? You see the ADX down here, we use a 14. Since January, the ADX, the histogram, the yellow histogram, has started to trend up in January, okay? It started trending up, that yellow histogram. And so the histogram is telling us there's a new trend. There was a trend back here, but it was an uptrend, okay? And then things begin to change here. And now the histogram came all the way down, and then it started trending up again, telling us new trend, folks, right? Now, in addition to that, the ADX tells us there is a trend, but in order to determine is it an uptrend or downtrend, we need to determine the relationship of the DI minus to the DI plus. And so you could see that DI minus crossed above the DI plus here. This is way back in January, okay? And it's remained there ever since. It hasn't crossed back below the DI plus. So the ADX was indicating a downtrend back in January, okay? And the DI minus was above the DI plus all along from January 7th, the first week in January, until it is still there at the current time, okay, on the weekly chart. So we have this trend indicator on the weekly chart telling us downtrend, right? We're in a downtrend. We have this trend line here telling us we're in a downtrend. We have the moving averages indicating a downtrend. We're making low highs and lower lows. Now, more recently, 3 weeks ago, 2 weeks ago already, because we're currently in this week here, we are currently in this area here, right? We had the parabolic, which is another trend indicator, switch to telling us that we are in a downtrend. When the parabolic is above the most recent bar, we're in a downtrend. So that's insofar as trend is concerned. Let's look at momentum. Insofar as momentum is concerned, the momentum indicator I've been using is one developed by Jerry Appel, the same person who developed MACD. And we call it a triple momentum indicator because there are 3 time periods used: 5 weeks, 15 weeks, and 25 weeks, okay? So when that is above 4%, as it was all along here when we had this uptrend, when it's above 4%, the 4% line, that magenta line, it's indicating an uptrend. But then when it drops below the 4% line, it switched to a downtrend, and that's what happened in January here, okay? Somewhere in January. So, and since then, we've had some false breakouts and attempts to break above the 4% line, but didn't succeed any further. False breakout, another false breakout. And currently, we are once again below the 4% line. So momentum is not momentum is not in our favor at all. If we're bullish, we are saying the momentum is certainly down, right? Supporting this downtrend. Now, we can also use MACD as a momentum indicator because you could see that it was losing strength here. The bears were gaining strength and the bulls were losing strength, and they still seem to be doing so. All right, so that's momentum. Now, if we want to look at the third one that Larry Williams likes to look at, the accumulation distribution indicator, we come over to this chart that I use here, which is one that we learned from Jake Bernstein. And Jake Bernstein plots Larry Williams' AD line, his accumulation distribution line. And you can see that all the way from this area here, from the area when the market started trending up last January, February of 2020, momentum, the stocks were being accumulated because this accumulation distribution line has been above its 57-week moving average. This is a weekly chart, okay? But there was a breakdown here. I think it's April 29th, okay? That's when the 80 line crossed below, and it's still below, all right? Below the moving average. So as far as the question, are the stocks being accumulated or distributed is concerned, stocks are still being distributed, okay? Stocks are still being distributed. So the trend is down, momentum is down, and stocks are still being distributed on the weekly chart. Now let's take a look at some other charts that I have. And one of them is the Japanese Ishimoku cloud chart, right? And this is a weekly chart. And you can see that all along here from 2020, we had a break above the cloud. After this breakdown here because of COVID, right? We had a recovery and we broke above the cloud and we remained above the cloud. This is a cloud here, right? Remained above the cloud all the way until about April of this year, of 2022. So where are we now? In terms of the weekly chart, you could see that we came down, we hit that resistance level here, the cloud, right? And we came back down, we hit it again, we all the way up here again, and we're looking to come back down. Right now, we're at the Fibonacci 38.2% retracement level. Now, a question one might ask is this going to be some significant support here? Can't answer that. We have to wait and see how things develop. We might have support here, but then we still have the overhead resistance of the cloud, which will be consistent with this chart over here, with this overhead resistance of this downtrend line of the highs. Okay, so that's the weekly chart on the cloud. Now let's look at the on the weekly chart. Let's look at the stochastic. Okay. So on stochastic, you can see the stochastic, when the market made this high, stochastic was overbought and it came down. rallied up, and now it's been overbought and it's been trending down. Okay, so is it going to go any further down, or are we going to find support at this level? We don't know. We have to wait to determine if that's so. Now, this chart here I've shared with you for many weeks now. This is a chart where we have the 9 EMA and the 30 front-weighted moving average. And when the 9 is above the 30, the market's usually trending up nicely. And that started back here. You can see that the 9 was above the 30 back in, let's see, June 5th of 2020. Of course, the market was rallying before that. But this confirmed a significant. Well, folks, let's do this. Let's bring up the SPX. You see, what I would conclude with is this. We cannot get too enthusiastic about, well, I wouldn't anyway. You could trade around this downtrend on the weekly chart, but I wouldn't get too enthusiastic about buying to hold stocks right here. I mean, I would trade within the downtrend, do some short-term trading if I was so inclined. I have no interest in doing this right now, and so I am waiting. What am I waiting for? I showed you that earlier. I'm waiting to see a break above 4100 and the 9 EMA remains above the 30 and we are in this area up here. Then I will start looking more seriously at stocks. So that's all, folks. I just wanted to make a short video and show you what's going on, or what I'm thinking anyway. Happy New Year. If I don't talk to you before the New Year, we'll try and do the video on the Zoom video on the weekend. Okay? Have a good day. Bye bye.